Hello and welcome back to the channel. Zach here, and today I'm going to talk about something I talk about all the time on the channel. Just wanted to do a little bit more of a deep dive on this subject in this video. So if you're new here, we welcome you into the community. Please like and subscribe, especially if you get some value out of this video. You could see that stat right on screen. We're going to jump right into it. 65% of Americans make this mistake after investing in crypto. And I would be interested to see if we took this outside the United States, because I think the statistic would be pretty similar. Now, this article coming from the Motley Fool, a very respected source in the industry, goes into some of the reasons why Americans and others make mistakes when investing in crypto. After we get through this article, I'm going to have a list of 10 different tips for you to keep in mind when you're investing in cryptocurrency and keeping that long-term mindset. So you're going to want to stick around in this video. I think you're going to get a lot of value out of this. So let's continue down here, and that's the big statistic, and it begs the question, well, why, right? So if we scroll down here, we could see that right here. So a large portion of buyers also make a serious mistake with their crypto. They sell it too quickly. About 65% sell within a year of buying crypto. Over half sell it within 6 months. All right, so keep that stat in mind. Now, they go into some reasons why a little bit deeper here. So it gives your crypto time to grow, and this is as to why you should hold on to your crypto for the long term. Now, to date, this has been the method that has been the biggest gainer for people. It has produced the biggest gains with cryptocurrency. Here are examples of gains that the top coins have made over the last 5 years. Number 1 and number 2, right? Bitcoin and Ethereum. So market leader Bitcoin turned $10,000 into $670,000 if you held for the last 5 years. How about the second largest cryptocurrency, Ethereum? You would have turned $10,000 5 years ago into $1.85 million. Now, I know a lot of people weren't invested in cryptocurrency 5 years ago and beyond that, right? However, we're sitting here and cryptocurrency is becoming more and more popular. This is why I stress the importance of saving your investment for the long term, meaning don't touch it until at least 5 years down the road. I talk about it all the time with Ethereum. I'm not touching Ethereum until 2030. Again, these are just my opinions, not a financial advisor, just for entertainment and informational purposes only. But here are the professionals right here from the Motley Fool telling you the same things that I've been stressing right here on the channel. So if you don't plan to stick with your investment for the long haul, you may be pressured to sell at the first big price drop. This is interesting, right? Because we've been going through a lot of uncertainty, right? And FUD out there right now in the cryptocurrency markets as well as in the stock markets, right? And a lot of people have panic sold when their investments went down. We always stress one thing again on the channel: buy low, sell high, right? This feeds right into this article. So let's go down a little bit more here. Another reason for you to think long term with your cryptocurrency investments. You ready? You're going to pay less in taxes. Who doesn't want to do that? And fees, right? So if you keep your crypto for longer than 1 year, you're going to pay less in taxes with when you sell it, because it's going to be considered a long-term capital gain. You're also not going to need to pay any taxes on it until you sell. The minute you sell and you gain a profit, you're going to pay taxes on that. Now, those 65% of consumers who sell crypto within a year end up paying way more in taxes. So outside of those rare exceptions, it's very, very clear, okay, that the most effective strategy for investors is to play the long game. And that applies with both stocks and crypto. All right, so it's maybe not the, most fun, right? Because swing trading can be very fun, day trading as well. But if you want to have long-term sustained success, it's about buying and holding, okay? All right, so that was this article. Now I'm going to pull up this document here that I've created for everybody. And this is investing in cryptocurrency for the long term, 10 tips. And I'm going to expand upon these as we move along. So first and foremost, select assets that have staying power. Most of your portfolio, in my opinion, should be made up of the big players, right? The Bitcoins and the Ethereums of the world. I know there's a lot of hype around Dogecoin and Shiba Inu. I'm invested in both of them. I like them. I do. I think they have a nice long-term future. But they're not a big portion of the portfolio, maybe 2 to 5%, right? Total. Okay, so that's tip number one. Tip number two, always formulate an exit strategy for each asset. That means as you go into an asset, as you buy an asset, you should already know when you would like to get out. At least some of that money, right? So maybe by 2025, you're going to take 20% of your profit from Ethereum. And by 2030, you're going to take out 50% of your profit in Bitcoin and then let the rest go. This is just an example, right? But you've got to formulate the best exit strategy for you, okay? That's number two. Number three, buy and hold, or as they say now, hodl, right? The best strategy is buy and hold. I know it's not sexy. I know it's not that much as much fun as some of the other strategies out there, but this is the best strategy for long-term success. Number four, buy the dips on assets you are holding. So when you have high conviction, whether it's in Bitcoin or Ethereum or both of them, when you have days like we've had recently here in the markets, in the crypto markets, the best times to buy are these times when it's low. And I know psychologically it kind of works in reverse, right? We don't want to buy when we see the price going down, but in reality, that's exactly what we should be doing, especially if we have that long-term mindset. Number five, don't make emotional decisions. And this really helps when you have that long-term goal, right? When you know you're holding something for 5, 10 plus years, it's really easier to keep your emotions in check. So that's tip number five. Tip number six, don't invest in all speculative assets. I stress this all the time on the channel. Sure, is it fun to get into some of these? Yes. Can they produce big gains? Yes, but don't invest in all speculative assets. Save, let me see here. I think I have it right here. 80 to 90% should be long-term, right? That's number seven. Here you go. 20 to 10%, and this is kind of on the high end, but I know a lot of people like this. But even if you had 10%, right, in speculative coins, and these could be more of like your swing trades, right, or shorter-term assets, you should still have exit strategies for these, but these should make up a much smaller portion of your portfolio, okay? We'll scroll down here. Number 9, invest most in the assets you know most about. This is an old adage from the man himself, Warren Buffett, right? He was huge for talking about, why he invested in McDonald's, why he invested in Coca-Cola, because he understood the product. He used the product. He understood its value. He didn't really go into a lot of the tech stocks, right? And still doesn't today. I think he might own Apple now. Don't quote me on that. But for a long time, he didn't invest in any of those. He stayed invested in the things he knew. And I think that is something that has really stuck with me. One of the things that Warren Buffett has said in the past. All right, number 10, enjoy the process and be patient. And again, you could do this when you don't make emotional decisions and you have that long-term future outlook with the assets that you're purchasing. So hopefully you got some value out of these top 10. We're not done yet. I've got a couple more things for you, but if you're already getting some value, make sure you like and subscribe. Would appreciate that. All right, so let's minimize this down. And let's take a look over here at the charts and just kind of show you. Today we saw Ethereum go down below 2,000. This was a great buying opportunity, still is. Bitcoin went down all the way to 28,000. So as you're scrolling down the list, you look at these assets that you have a high conviction on, right? That you and people in your circle have a high conviction on. These are the ones you want to be buying on days like this and downturns in the market, okay? Before we get out of here, if you want to come over and join the private community, we've got a Patreon group going. It's a lot of fun. We've got 14 members now already, and I know a lot of people may be planning on joining at the first of the month to get that first full month in, and that's cool too. So if you're waiting for the first of the month, we'll be happy to have you when you come over. And we've got the supporter level and the insider level. Now the insider level is going to give you full benefits here, buy and sell trade alerts, and insider-only content. We're also going to build a portfolio together. So if this is something that interests you, come on over. We'd love to have you. And again, one last time, hopefully you got some value here. Like and subscribe, and I will see you in the next video.